Add third year minus interest, add second year minus interest, add first year minus interest plus down payment. Depreciation account data to scooter account, transfer entry, profit and loss account data to interest account to depreciation. On 45,000, 10% is 4,500, balance is 40,500. On 40,500, 10% is 4,050, balance is 36,450. Hello, my dear students. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Financial Accounting, second semester, Unit 2, Session 4 of BCom, in favor of accounting for hire purchase. I told in the last session also, hire purchase is a credit system where the goods passes from hire seller to hire purchaser on the date of the down payment. The balance will be paid in the number of installment till the last installment is paid. Hire seller is the owner and hire purchaser is not the owner. The legal ownership will be transferred only after the last installment is paid. Each installment includes the interest. It's important. Who are the two parties are? One is the hire seller, one is the hire purchaser. So when the goods have been purchased on credit system, it is nothing but a credit purchase where the purchaser will pay the sum down payment. Balance will be paid in the number of installments. Each installment includes the interest. When the goods passes from seller to the buyer, buyer is not the owner, but the possession of the goods has been transferred from seller to the buyer, but the legal ownership lies with the hire seller till the last installment is paid. After the payment of the last installment, the legal ownership will be transferred from hire seller to the hire purchaser. So it's a credit purchase system. The common general entries are in the books of hire purchaser, asset account data to hire seller account, hire seller account data to bank account. This goes to the on 1-1. Then at the end of the first year, interest account data to hire seller account, first installment, hire seller account data to bank account, depreciation charges there, depreciation account data to asset account, transfer to profit and loss account, profit and loss account data to interest account to depreciation account. I will repeat once again. In the books of hire purchaser, we say that we general entry in the books of hire purchaser, he passes. What is coming in asset? You have to pay the money to whom? Hire seller. What's the entry? Asset account data to hire seller account, down payment, hire seller account data to bank or cash account. So end of that year, interest account data to hire seller account, first installment, hire seller account data to bank or cash account, depreciation on that asset, depreciation account data to asset account, transfer to profit and loss account data to interest account to depreciation account. This goes in favor of first year. Second year, start with interest. Interest account data to hire seller account data to bank or cash account, depreciation. Depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation. This is very common entry you are going to pass. In the books of hire seller, we have passed. This is in the books of hire purchaser. In the books of hire seller, so what's the entry? So we'll make the purchaser as a hire purchaser account data to sales account, down payment receipt, bank account data to hire purchaser account. Now we charge the interest to hire seller. So hire purchaser becomes the debtor, hire purchaser account data to interest account. When you see the first installment, bank account data to hire purchaser account. No entry for depreciation because asset has been transferred here. So the entry will be interest account, profit and loss account data to interest account. Second year starts. So first he has to pay the interest. Hire purchaser account data to interest account. When you receive the second installment, bank account data to hire purchaser account. So interest will be transferred to profit and loss account. In the hire seller entry, profit and loss account data to interest account. Here, interest account data to profit and loss account. Credit entry starts. So it will go like this. So you must remember one by one what are the entries are. We move on to the problem now. On 1/1/2001, Vinay Printers purchased a scooter on hire purchase system for rupees 60,000 to be paid as follows. 10,000 down payment at the end of the first year, 14,000. So first year 14,000. Then second year 13,000. Third year 12,000. Then fourth year 11,000. If you add all these things, first year 14,000 plus 13,000 plus 12,000 plus 11,000. So 50,000 he paid. 50,000 installment. So he pays hire purchase system for rupees 60. 10th down payment. Pays 10,000 at the end of the first year. Down payment 10,000. Totally 60,000. What is the cash price? 50,000. Down payment 10,000. Totally 60,000. Then here the 60,000 to be paid as follows. 10,000 down payment, balance in installment. Each installment includes the interest. What is the total amount? 60,000. 10,000 down payment. So the balance is 50,000. We have to calculate. How to calculate? I'll show you here. So we have to calculate the interest and the cash price. So it is called the backward method. You have to come fourth year minus interest, add third year minus interest, add second year minus interest, add first year minus interest plus down payment. We'll go with 11,000. 11,000 to 10 by 110 is 1,000. Deduct 1,000. 11,000 minus 1,000 is 10,000. Come back. 10,000 plus 12,000 is 22,000. 22,000 10 by 110 is 2,000. 22,000 minus 2,000 is 20,000. Come back to next year. 20,000 plus 30,000 is 33,000. 33,000 10 by 110 is 3,000. 33,000 minus 3,000 is 30,000. Come back to next year. 30,000 plus 14,000 become 44,000. 44,000 10 by 110 is 4,000. 44,000 minus 4,000 is 40,000. Then these are all the cash price due at the end of the each year. Then down payment is 10,000, which does not include the interest. Then total is 50,000 plus interest is 10,000 becomes 60,000. 50,000 down payment is 10,000 balance in no interest is paid. 10,000 40,000 balance. On that 10% is totally 14,000. 10% of outstanding is 4,000. Deduct 10,000. Deduct 10,000. 30,000. Installment paid is 13,000. 10% of this is 3,000. 13 minus 3 is 10,000. Next we have got a balance of 20,000. 10% of this 2,000. 12,000 minus 2,000 is 10,000. Last year 10,000. 10% of this is 1,000. Total 11,000 installment. 11,000 minus 1,000 is 10,000. What is the cash price is 50,000. Interest paid is 10,000. Totally it becomes 60,000. We'll move on. The cost price of the machinery is 50,000. Depreciation at 10% is 5,000. Balance is 45,000. On 40, we can written down value method. On 45,000, 10% is 4,500. Balance is 40,500. On 40,500, 10% is 4,050. Balance is 36,450. We'll move on to entries now. First, generated in books of Mr. Mohan. So, hire purchaser. He purchased the scooter from a hire seller. Scooter account debtor to hire seller account. He has to pay the money. Then hire seller account debtor to cash is a down payment. Interest of that year. Interest account debtor to hire seller account. he pays the first installment. High seller account data to cash account, division of the tier, depreciation account data to scooter account, transfer entry, profit and loss account data to interest account to division account. This goes only 2 entry extra in the beginning. Next year starts from interest. Second year, interest account data to high seller account. High purchase says I have to pay the money to high seller. Then he pays the money. High seller account data to cash account. Then division of that tier. Depreciation account data to scooter account. Transfer entry to profit and loss account. Profit and loss account data to interest account to depreciation account. So this goes to third year. Next year start from interest. Interest account data to high seller account data to cash account, depreciation account data to scooter account, transfer entry, profit and loss account data to interest account to depreciation. Last year, interest account data to higher seller account data to cash account, then depreciation of that year, depreciation account data to scooter account, transfer entry, profit and loss account data to interest account to depreciation, being interest and depreciation transfer to profit and loss account. Hope you understand. So these are all the entry we have passed in the books of high seller. He says how you have done the goods passer from seller to the purchaser on the date of the down payment, goods passer from seller to the purchaser, but the legal ownership lies with the high seller till the last installment is paid. The entry goes like this: asset account data to high seller account data to cash account, interest account data to high seller account data to cash account. For division and machinery, division account data to asset account, transfer entry, profit and loss account data to interest account to division account. This goes in favor of first year. Second year starts from interest account data to high seller account, payment of that year, high seller account data or bank or cash account, then depreciation account data to machinery account, profit and loss account data to interest account to division account. Hope you understand. So we already solved one problem plus interest, another problem inclusion of interest. In the next session, we solve one problem calculation only interest, different methods of if the interest is not given, if the rate is not given, how to solve. Then one entry we have passed in the books of high seller. We have passed in high purchaser. We passed the entry in the books of high seller. That is in the fifth session. We have to calculate the interest. We have different methods of interest for 10 marks. They will give the rate of interest. If the rate of interest is not given, with the calculation of interest, calculation of the cash price. Till then, goodbye. Meet in the next session.